Hello, good afternoon, and welcome to the live trading hour, which is brought to you by the Live Trade Room. What we'll be looking to do this session, as we do every live trading session, which is look for high probability trades across some of the world's largest markets, from foreign exchange to commodities, and also your global indices as well. So we have a multi-asset class, multi-time frame view of these markets, and we look to try to pick out those high probability trades, and of course explain to you what those are, how we identify them, and a lot of the education around our decision making as well as we go. So without further ado, then let's start, if we can, with our risk warning. Please, of course, make sure you are very familiar with the risks involved in trading the financial markets, and what we often mean by that is not just that trading is risky, everyone knows that, but understand how much capital you're committing to each trade. That's a really useful thing to be able to work out. Often when we speak to traders about how much capital you're committing, we often hear things like, oh well, it's just a one lot trade, or a 5 mini lot trade, or whatever the case may be. So we're talking in very, very different language, whereas what we want to do is try and teach traders how to speak in plain English, try and simplify things as much as possible. What monetary amount are you committing to each trade? Because that will determine a lot of the psychology behind trading these markets. It'll determine it also has a very important impact in terms of how profitable you're likely to be on the upside. So there is downside concerns for us, especially when you're starting out. Keep that percentage of risk very, very low. It's irrespective of how much capital you're actually trading with. So we talk an awful lot about percentages, which is clearly identifiable. So whatever amount you happen to be trading, if you're trading 1, 2, or 3% of your trading account in a trade, you can quantify that very, very easily. So for example, if you're trading with a 10 grand trading account, 1% is a £100, dollar, or euro trade. Up to 3% is a $300 trade. So you can quantify, and then it's a case of calculating that trade size and going through that process technically, so that that you're not constantly oversizing. So all of these things is a fundamental part of risk management, something that is higher on our priority list when we trade the financial market. So it's hopefully something you'll pick up over time. Okay, so let's begin with a review of market moving news, as we always do. We'll bring up.
Who wants to keep on talking, but says we have committed to moving up the exemption threshold for banks paying negative rates, since Swiss banking sector continues to be able to absorb quite a strong shock.
So that's our Squawk service. From a news perspective, there's kind of very little, to some degree, going on at the moment. As you can see, the impact of the news event for the next 3 days is pretty poor, pretty low. Wednesday, a little bit more activity perhaps in the afternoon. ADP numbers, crude oil inventories. Thursday is the big one for OPEC. So will they make further cuts to their supply? Will they actually look to increase supply more so than current restrictions are in place? So we'll see. There's estimated about 50 million barrels per day extra supply coming onto the market. So we'll see what happens with the oil markets over the course of this week. It's a bank holiday in Canada. I think there's a couple of bank holidays this week, if I'm not mistaken. Is it just a Canadian? Yeah, no, it's Italian as well. So that's on Tuesday. So really, the first 3 days is relatively quiet, very sort of market specific. And Thursday we'll have a little bit more sort of action, so to speak, with regards to OPEC and the oil markets. And Friday's really the big one. So what we'll do is, sorry, bear with me 1 second. Okay, apologies for that.
The Coles hasn't really said anything of note yet, and we've also got Eastman's Weidman due up as well. No prepared text from Weidman.
Okay. With that in mind, we're really preparing ourselves for the major news of the week. In fact, it's one of the biggest events of the month ordinarily, which is non-farm payroll. So we'll see the job situation, something the Fed are keeping a very close eye on. We'll see the actual employment change number, expected to be a healthy number, 700,000. The unemployment rate is expected to drop marginally as well. And the average hourly earnings certainly seems to be a little bit above average, so to speak. So we've got a quiet first half of the week, followed by probably an explosive second half of the week. It's probably worthwhile doing a quick check on your longer term bonds, so we can look at the 10-year US. And we've seen a significant uptick, well, a reasonable uptick, let's say, from sort of in around 149, 150 up to 154. So a significant uptick. We're currently just pulling back a little bit, so we'll see what happens over the course of this this little trend. Maybe it's lending to a little bit more price pressure. What we're seeing and how we can convert that information is we can have a look at markets like the US dollar and see if we're seeing any corresponding move. And broadly speaking, I suppose we are. The S&P is looking mildly negative, but at all-time highs. So if we just move this level up from last week. So today we made a new all-time high. So we keep getting, these markets that are gapping higher, and eventually.
He's on the rise now. Says wants to discuss conditions under which emergency situation from monetary policy point of view. It says preconditions for ending net PEPP are that all major restrictions are lifted, recovery is solid. Immediate corona-related measures should then be reduced in both fiscal and monetary policy. It says we cannot determine the exit from the monetary policy crisis mode far in advance. Net PEPP purchases could be reduced step by step in advance. This will then show whether envelope is used up. PEPP must be ended when emergency is over. That was important to me when scheme was introduced. Financing conditions still cheap.
Yeah.
Just quickly go with some of those comments. Environment wants to discuss conditions under which emergency situation ends from monetary policy point of view, but it says preconditions for ending PEPP are that all major restrictions are lifted, recovery is solid. Immediate corona-related measures should then be reduced in both fiscal and monetary policy, saying that we cannot determine the exit from the monetary policy crisis mode far in advance. It says that net PEPP purchases could be reduced step by step in advance. This will then show whether envelope is used up. It says coming year would not be crisis year if assumptions about pandemic are confirmed. PEPP must be ended with emergency over. That was important to me when the scheme was introduced. It says financing conditions still cheap.
Okay, so attention is going to start shifting to governments and economies looking to turn off I suppose, some of the fiscal measures, some of the government spending on things like social welfare payments and things of that nature. So those items were obviously put in place in order to, I suppose, just support people through the crisis. It's unprecedented in terms of monetary and fiscal policy. In history. So, I suppose you could argue they've done a fantastic job. But now they need to turn off the taps.
The German inflation spike is linked to temporary factors.
And
these upsides for both German and Euro area price outlook.
They're all at odds to make it clear that this price pressure that we're seeing is actually temporary. And it'll just remain to be seen whether that is actually the case or not. We're seeing an uptick in the 10-year note. So we are seeing a little bit of pressure being applied. We would now expect to see some dollar strength coming in, and we can see a little bit of a dollar move. Let me sort of take this out and we can look at it in a bit more detail. So a strong rejection of the highs, and actually we're looking quite negative again for the pound dollar. This market is already just breaking lower, so the euro dollar to the downside is you can see the bit of room below this level. So we'll get into the euro dollar. The dollar yen, we expect it higher. We're pretty close to breaking above this little indecision, Friday's high. There's probably an opportunity there, but there's probably sort of better opportunities elsewhere. So we're seeing a little bit of that support, that dollar support creep in. So it might give us some decent opportunities pretty shortly. Some are in slightly better position than others.
Related news now, Swedish Minister of Health Hellengren says we'll ease some COVID restriction from July the 1st.
Okay, so these are all potential pullback trades. So they're viable dollar strength trading opportunities. We're already in the pound dollar to the downside. We're also in the pound yen to the downside. This seems like it's kind of struggling to squeeze lower. We do want to try and stay in it because this market can flush lower very, very quickly. And I suppose just to categorize it, we can identify, this period of consolidation really. Every time we get up to these highs, we end up rolling over. So let's see. This market has gone through periods of kind of sideways moving patterns before you get flush trades to the downside. So that's what we're looking to see again. Hi Finbar, good afternoon. Hope you're well and you had a good weekend. Are you in any trades at the moment? So really the opportunities are beginning to stack up with the dollar. Elsewhere, just quickly as we approach the the US trading session. So a lot of consolidation in gold. Ultimately, actually, we do like it higher as opposed to lower, but that would fit in with certainly the inflation view. Crude oil, we've got OPEC this week. OPEC have already made this statement last week that they are mindful of the upside pressure that the price of oil has on inflation. Okay, so same from last week. You added copper along, very good. Yeah, we could have a look at copper in a minute actually, because they've taken a bit of a dip, aren't they? So I assume that's a bit of a pullback trade then. So crude oil, all we do is grind at these, but like last week's price action was a little bit wishy-washy, but as you can see we do continue to grind, but not great quality price action. What's going on here, it's kind of sort of flatlining really, with a little bit of volatility higher and lower. Okay, the S&P, so we've made new highs today, looking a little bit on the softer side. The Nasdaq is still looking quite bullish. We are at these highs.
Member of Biden's Council of Economic Advisors, has told Money Morning, from the start we were clear that inflation would firm as the rescue plane got shots in arms and checks in pockets. The reason these price pressures are upon us is getting lost. There's an extremely robust recovery afoot. with strong job creation and wage gains for workers who finally have some bargaining clout. As a comment from Jared Bernstein speaking on Politico Morning Money.
Okay, so a lot of these markets are benefiting, especially the indices markets are all benefiting from obviously massive stimulus to the extent that we've never seen before. So unbelievable amounts of quantitative easing, printing cash for this sort of top-down approach in the form of buying bonds. Increasing liquidity as a result, so that the idea is more people will be employed, wages will tick higher, so and that needs to be supported by solid growth, and that's what we do have that environment, but there's a very fine line between growth and inflation that can become a bit of a structural issue. And that's what these markets are pretty much grappling with. That's why markets like the DAX, you're up at these highs, but you're getting these little flush trades. And I suppose the most clarity is in the US markets. Certainly over the last 5 days, that's the trade. But it's coming off the back of a pretty significant rollover to the downside. So we're not really getting these opportunities for, I suppose, natural corrections. We're getting relatively small dips before the market starts making new highs again. Historically, trading all-time highs and all-time lows have always been a challenge, not just for us, but for traders generally. And it's still a difficulty because if you trade technical charts, you don't have any other price action to work with. So it's really just making a call, I guess. And you'll have large portions of this market, like your investors, looking for somewhere to put their capital, so they'll just continue to plow into indices markets, which is why you don't necessarily see significant volatility. You just get this grinding price action, because a lot of traders will certainly value these markets as incredibly overpriced assets, and therein lies the difficulty. Could you buy the stock market at 42.90? You might have a sort of a 50-point stop loss. Could you guarantee another 150 points to the upside without this market rolling over? Like the probability of a successful outcome is slightly reduced. Hindsight's a wonderful thing, but at every point in time you've got to make a decision, at a very important, or in this case, a very, very, very high price. So it's a more of an individual trader's decision really on markets like this. So crude oil just rolling over to the downside. Gold. So look, we'll continue to just focus on these dollar markets for the trading session, and we'll see where the opportunities lie. So we've got the Aussie dollar and the New Zealand dollar as viable sell trades. We're probably close to a little breakout to the upside for the dollar CAD. The dollar Swiss looking positive. So they're all beginning to look quite positive now. So let's just have a look at the euro dollar in a little bit more detail. So this is how we'll assess these markets. In fact, we can look at slightly higher time frames. So here's the trade. So when we look at this at smaller time frames, we've had a similar sort of sideways moving pattern before. We take a really strong, really explosive move to the downside, and then we get the pullback trade, followed by a fairly long period of sideways moving markets. So we're looking to trade this to the downside. The direction is predetermined. It's coming from top left to bottom right, and we anticipate there's plenty more downside in this market. If you look at the daily time frame, you know, this is a technical pullback followed by indecision, and now we're getting a flush trade to the downside. So there's a viable trade in there, and in fact now is not a bad time for that opportunity. So we're now below this low. We've closed below the low. Just want to see if we can do any better on the stop loss. Okay, the 1944. 1944. So hopefully there'll be a couple of good opportunities with this dollar strength trade. So we're just getting the bounce off the low. So we'll certainly take a good look at that. We're already in the pound dollar to the downside. So we're slowly beginning to get there. Okay, so the dollar pairs that are giving us the better opportunities at this point in time, and it might change. We might get the dollar CAD pushing higher above the monthly high. The dollar yen's likely to continue further higher. But we look at the Aussie dollar to the downside. There's your fairly straightforward pullback trade for the next extension lower, and there's no reason why we can't do the same for the New Zealand dollar. So strong pullback. If I just zoom out a little bit more, so there's your flush to the downside. There's your pullback last week. We had to kind of put up with that, and now we're getting that extended move to the downside. We're getting a little bit of a pullback. So our trade plan's quite straightforward today now. So we've got this little move to the downside. We'd expect further downside from here in the pound dollar. Strong rejection of those highs now, so we want to try and stay in this if we can. The Aussie dollar, potential nice move to the downside there, and we also have the New Zealand dollar. The gold market, which is crossed with the US dollar. So if the dollar strengthens, you know, we can probably prepare ourselves for further downside moves in gold. But as you can see, we've just got this consolidation in at this little zone in here. So as long as we're consolidating, we can afford to be a little bit patient. No surprise to really see the euro pound just look to bounce off these levels. It's pretty much done it again now. So every time you get up to those levels, you get actually a nice flush trade to the downside. Like it's not a fantastic trade because we're up and down pretty much on a daily basis. So it's not the highest probability trade. So that euro dollar below the 3-day low, the 119.11. we're already in the pound dollar to the downside, with our stop loss just above today's daily high. So hopefully that rejection of the high will filter in and we'll get this continuation trade to the downside. Technically speaking, we've actually got an entry in the Aussie dollar below the 75.80. So we're a little bit below that now as we speak. And the New Zealand, the 70.50 level. So now we'll just go in and assess the viability of those trades. Yeah, and that's pretty much our focus. So the other market really, which I do want to sort of keep an eye out, is the S&P, just to see if this continues to roll over, because this will support. If this softens and we've got interest rates pushing higher, this can absolutely give us some decent dollar strength trades, as you can see. So let's go into each of these dollar trades and we'll have a look at the smaller time frames and we'll just see how price is behaving around this level. So it's failing to close back above see. If we get into it now, we've easily got a kind of a 40 pip trade, and if we allow the market to kind of pull back in around the 1920 and get into it, then we're looking at kind of a 50 odd pip trade. So we've got to keep both options open as this market is pulling back. Let's keep an eye on it on a slightly smaller time frame. So we're looking for this market. So here is a viable trade. What we'll do is we'll get our platforms open. We might be able to get into this now.
It regrets the lack of confirmation by Iran of the IAEA monitoring deal.
So with this pullback, you want to see kind of markets begin to flush further to the downside. So actually, the previous 5-minute candlestick might be difficult for you to see this. So let me zoom in. The previous 5-minute candlestick is indecision, and you want indecision around major levels of resistance, which is the 1911 from the daily time frames. So then you want that little flush trade to actually, roll over to the downside and look to get the next leg. But if it opens and it starts pushing higher, then you want to see where that turnaround trade begins to kick in, because it very well may be a little bit higher, maybe up at around the 1920 level before we get that flush trade. So we just want to give it a little bit of room. So the Aussie dollar, let's see what sort of situation this market is in. So we've had this market move sideways for quite some time actually, and we just record this high as well. So we're actually seeing a structural failure to the downside now. We're getting that little pullback like we are in the euro dollar. So no major surprise with that. So we can just monitor this little price action down at these lows and look to get in on the little flush trade to the downside. So very similar situation to the euro dollar. So we keep an eye on these markets now. And the New Zealand, probably a similar situation you would assume. Okay, this has been grinding a little bit more. So this hasn't been consolidating for as long as the Aussie dollar. and the euro dollar, but we do have a structural failure. So that's what this market represents. It's like a flush trade to the downside, around strong resistance. So that's what this level represents, strong resistance. So this is roughly the area, give or take a few pips, where you'd want to see these types of structural failures begin to kick in. So very similar to the Aussie, we're getting a little bit of a pullback. If this market can pull back to the 70.50, then there's your no-brainer sell trade. It would be on the pullback. You can see the euro dollar has just sort of okay, so we look to get in on the pullback trade in the euro dollar. Same situation with the Aussie. And to be fair, like we do, if we get these little flush trades to the downside, you've got your initial breakout trade, which is viable, but if you're in long-term consolidation, you know, they can be difficult ones to get into. But once you get the flush trade, what it often gives you is the flush to the downside followed by a pullback opportunity. So we'll just, if we can just be calm and just wait for these markets to pull back, whatever price that is, then you get the opportunity to get into them again, and it's that happens on a very regular basis. So they're currently pulling back, so let's let them pull back, and when they start to flush further to the downside, we'll look to get into those trades. And what we can do is get our trading platforms ready. Okay, let's see if this little flush trade does push lower.
Bottom of the hour, we'll have some Brazilian data, personal loan default rise rate and outstanding loans, total outstanding loans for May coming from Brazil, seen at 4.147 trillion from 4.126 trillion. And in terms of personal loan default rate, that's seen up 0.77.5. That's out at the bottom of the hour.
Okay, so look, we're in the process of these little pullback opportunities. This may take a little while. We don't really have major news events that are sort of we're not awaiting any major stimulus in these markets, so it's really a case of looking to get in on the pullback on each of these markets. From something sort of in and around this kind of area to get the next leg to the downside. Same for the Aussie dollar. So our bias is very much lower in these markets. So it might be an opportunity for prices to pull back to these kind of levels and then get the next leg to the downside. Same situation for the New Zealand.
Nothing yet out of Brazil.
Would be a little bit of a pullback trade. You kind of want to sort of go with the market really. So if it flushes lower from here, it's still a viable selling opportunity. The pullback might not be quite as you would like, but they don't always perform exactly what you want them to do. So that's the trade. It's the euro dollar sell trade. It's the Aussie dollar sell trade. It's the New Zealand dollar sell trade. They're currently pulling back, so let it pull back, and then we'll look to pull the trigger to the downside. So we might be getting into these in 10 minutes time, or it could be in 2 hours time. Like, it's going to be a tough one. So and looking at the S&P, there's no volatility in this market at all. So, and we are 30 minutes into the open now. So in fact, it's marginally looking a little bit more positive now. Which is probably why that we're finding a bit of a bid for this dollar weakness off these lows. We are just looking to go with the momentum in this market, which is clearly to the downside. When I say clearly, it's
Deal data coming through now. Outstanding loans month over month, a rise of 1.2%. Total outstanding loans there at 4.178 trillion. Personal loan default rate out of Brazil, 4.1% from 4%.
It's as clear as these markets can be right now. Last little look at the 10-year note. It's just rolling off its highs. So there was a little bit of concern. There was a little bit of an explosive move over the course of today, up to 154, and now we're sort of rolling back over 152. So there's still this really strong growth behind these markets, and central banks are at odds to try and say there's nothing really to see here as far as inflation is concerned. You know, many other commentators are not so sure. So it might take a little bit of time, but when we find out, you know, who's correct, then there'll be some exceptional moves, you would assume. So we're waiting for the pullback trade in the euro dollar, maybe in and around this little zone here. So it's when this market starts to roll over, we can then pull the trigger. Same with the Aussie dollar, same with New Zealand dollar. So unfortunately, guys, it's just going to be a case of just being a little bit patient. There's not a huge amount of opportunity across these markets right now, so try to take that on board. But these are definitely, you know, three decent opportunities to see some momentum to the downside. So that's our trade plan for the day. We'll have our trade plan session again this evening, so we'll be prepared again for tomorrow's trading conditions. Like the euro dollar, if this closes around the 1914 and we start to roll over, we might be able to get into this trade now. In fact, they're all these are on 5-minute charts, so we're on quite a small time frame. Might just give it a few more minutes.
Back to news on Sweden. Sweden's opposition leader will form a government if possible. This was the resignation of PM Löfven this morning.
Okay, so we've got this little rollover price action now. So what we're going to do is see if we track these little lows here. You see, if we don't get prices pulling back to the 75.70, for example, which is only sort of 8 pips away, then when the market flushes through to 75.57, then that is your kind of your continuation breakout trade to the downside. Same with New Zealand. There's just an appetite. It clearly looks like there's an appetite for a little bit more of a pullback in these markets. So it's just a case of timing now. These are 3 trades that you can watch. And look to pull the trigger once we get prices flushing further to the downside. So look, on that note, we do need to switch rooms, guys. So we've got another trading session, but these are the markets that we'll be looking at in the next trading session. So we'll just see how we get on with these markets. They may be useful. We might get some good opportunities off today. Unfortunately, we'll just have to wait and see, just to see how we get on. So on that note, look, thanks very much for joining us. We'll be back again tomorrow at 12:30. We'll be able to see how we get on with these trades. We'll have a look back, and there might be further opportunities tomorrow, so we should see how we get on. So look, thanks very much. Give us a thumbs up if you can. Join us tomorrow. Subscribe to our channel. I think you click the bell function if you want to be notified when we go live. And you're very welcome to join us every day at 12:30 for the US trading session. So we'll see how we get on. Thanks very much. Fingers crossed we get some moves in these markets. It looks like we're getting that flush trade now. So that euro dollar trade, we're probably going to be getting in around 19.11, and below the 75.57 for the Aussie, and the below the 70.30 level for the New Zealand, if prices can break those levels. So look, thanks very much. We'll see you again tomorrow. Fingers crossed we get some moves, and bye for now. All the best. Take care. Bye bye.